What's up, YouTube? So, quick one. What I want to show you in this video is the week analysis. I want to analyze trade for you and show you entry and exit opportunity so that you can also take advantage of uh, the trades that I will be analyzing in this video. And the thing is that I will be doing this now every Sunday. I will be dropping video of trade analysis for the week, so you can also take advantage of these things. This is just my own way of trying to help as many people as I can. Please, I want you to like and subscribe to this channel, because this is what you will keep getting before market opens, and you can actually capitalize on it. However, uh, don't take my word for it after the analysis. You also need to also analyze the market yourself. Okay, you also have to look at it the other way around. In fact, what I would advise you to do is that when I analyze market, let's say for example I ask you to I show you that okay, it would be nice to buy a particular asset. Try and do a counter analysis to see if you have more reason not to buy. That way you can be on the safer side. All right, but the reality is, whatever I'm going to show you in this video, whatever I'm going to explain in this video, is basically what I will follow and what I've been doing. All right, so don't let me waste much of your time. Let's go to my computer screen. Mind you, if you want to understand the psychological part of all these things, because it's a different thing to call trade for someone, it's another thing to know when to enter, when to exit, and when not to enter, and how to do a follow-up. A lot of things that I can't actually explain in a video. And the only way you can learn all these things is through my mentorship. So if you are interested in my mentorship class, check the link in my bio. You will see my Telegram and my IG link there, so you can just send me a DM. Okay, so uh, let's go to my computer screen, and let me show you the trades, best trade for the week, or the trading setup for the week. All right, so now that let's start with S&P 500. Let's start with the indices first. I will not be talking about UK 100, but I will be talking about the rest of the indices. So S&P 500, actually I'm already long on S&P 500, Nasdaq, US 30. I think the only indices that I'm not long on is US 2000. Okay. Okay, so let's start with S&P 500, and this is S&P 500 opened on my chart. First of all, this is a bullish market. That's the first thing I want you guys to understand. S&P 500 is a bullish market. So as a trader, when you have a bullish market, what you want to wait for is a retracement. And when that retracement happens, that is when you want to enter. But in my own case, when that retracement happens, I do not just jump into the trade. I want to wait for my price action pattern. Like in this case now, this is like two bottoms here, which is the reason why I took an entry here. Initially this week that passed, I have actually taken an entry on this asset, on these indices before, a buy position, but I got knocked out, so I just got new entry. So now that the trade is already gone, how do you take advantage of this likely bullish run? Now what I will say is this: on Monday, when market opens, if you see any candle breaks to the upside, okay, you may want to break to the upside of this small resistance that you are seeing here. You may take a buy position. Although I don't take trade like that, I don't trade like that, but I feel the market is definitely going to, if it breaks above here, it's going to continue the run. Okay, so this is why I said you have to do your own checks before you do that. That's why I'm telling you now that I don't trade breakout. If, for example, I miss this trade myself, I will not trade this breakout. I will only be waiting or hoping for a retracement to happen, and that retracement might take a very long time, okay, for it to happen. Market might have to get up to this level before any form of retracement. Okay, I don't know when that retracement will happen. So it may even go above this particular resistance, may go above like this, retesting this place. So I don't know when that retracement will happen. So, but because of the fact that I am so strong my bullish bias is so strong. Any breakout from here, to me, I feel is going to continue to go to the upside. Okay, so that is one thing, and one of the reasons why I am so positive about S&P 500 going bullish is because based on the institution bias, okay, based on the institution bias, this S&P 500 is likely, according to most of these institutions, is going to get up to 6,500. Some of them even projected more. Okay, so this is where 6,500 is. Okay, I actually marked it here. Okay, so a lot of institutions believe that S&P 500 is going to get to this place in 2025. Okay, this might happen before the year runs out, this new year runs out, or market might go above it. Okay, some of them projected above 6,500, while some 6,500 exactly. Like take for example, JP Morgan, Morgan Chase, Goldman Sachs, Bank of America. Some of all these ones, I think they projected 6,500, and then I think there are other institutions that projected 6,666 around here. There are some. I think there is a particular company or institutions, one of well-known institutions. I can't remember their names now. Projected 6,700. So the idea is that all these institutions all projected a bullish run for S&P 500, and S&P 500 is the let me say the instrument used to measure even some of these other indices like Nasdaq US 30. So if S&P 500 is going to go in that direction, be expecting that S&P 500 US 30 Nasdaq US 2000 is definitely going to have that impact, that bullish impact too. So which is one of the reasons why you want to consider buying when you have the opportunity. So in this case now, the market is likely to go up and then retrace. So a breakout from here could be considered, but that is what I will just say. But if Monday you see a retracement, then that will be a very nice opportunity for you to enter a buy position in this kind of trade. Okay, and if you don't want to trade the breakout, then wait for another retest. And when that retest, retracement and retest, when that retest happen, you want to make sure you wait for, let's say for example, market pull up to this point. Okay, and then you have this type of retracement, then you want to wait for price action pattern like this, just like I've considered here, and then you take a buy position, your buy position. But now imagine if market is going to go all the way from here, that is going to be a long time, then take time again to retrace. This is 4 hours anyways, so it's going to take time. So the ball is in your court now. So Nasdaq and US 30 follows suits, follow similar things, so I won't want to waste your time on that too. Okay, as you can see, it's a similar trade. It's similar, just like S&P 500. You can see Nasdaq. Okay, so maybe after, if you see a breakout, maybe a close above, you may want to consider, just like in S&P 500. So there's nothing much to say about this. If you check your US 30, the same thing. US 30 is still, you can still enter US 30 somehow, because it has not really gone far. You can enter and just move your stop loss a little bit closer. Just make sure your stop loss is below these two bottom chart, just like my own is. Okay, so you can still enter, and if you see a decent see a small retracement a little bit, so that you can manage, you know, if you enter somewhere around there, that will give you the opportunity to enter, to use a small stop loss. Okay, you can see, compared to me that enter around here. Okay, let me see. Okay, around here. Okay, so that is one thing you want to do. Okay, that is one thing you want to do. So this is also an opportunity. US 2000, I don't think there is any entry. I actually wanted to buy US 2000 Russell, but the reason I didn't buy Russell, US 2000 is the same thing as Russell, in case you don't understand that. The reason I decided not to buy Russell is because when I enter a buy position on S&P this last week, I entered that position S&P. I entered in 4 positions: S&P, Nasdaq, US 2000, US 30, and I was also in a buy go trade. So when that indices, all these S&P 500, Nasdaq, when they went against me, I lost a significant amount. So I have to cut down my entry right now. So because of that, I removed US 2000 and just enter just 3 of this S&P, Nasdaq, and US 30. Okay, even if they work similarly. So those are just three indices that I entered. And yeah, so basically that is just all for them. So here I don't see, but if you see a breakout from this particular resistance, maybe you can take a buy position as well in this case. Okay, that being said, let's move to commodities now. Oil, let me start with oil. I do not have any setup on oil yet, so because of that I will not be talking about oil. But for gold, I actually traded gold last week and I made a small amount of money. That small is not really small. Gold is very, very volatile. So this is the trade last week. This is the trade I took last week. I exit the trade around here. So now I expect to see retracement and this pattern. If I see retracement and double, if I see now, even if I see retracement, I'm not just going to jump into this trade. No, I'm not going to until I see this pattern. When I see this pattern, that's when I will like to go long on gold. And this time around, I'll be holding it to this place. I will not even be closing the gate here. I will just move my stop loss. My stop loss basically. Okay, so that is my bias on gold. Buy if market give me price action pattern here. So stocks, okay, I do not want to talk much about stocks, so let's leave that aside. Even coin, I don't want to talk about that. Maybe next week Sunday I will talk more about this one, so I don't want to make the video too long. So this is what I want to show you. I hope it's helpful. Please don't forget to like and subscribe. See you in my next video.